Welcome to TradeTheNBI.com. This is John. This report is for the 22nd, and well, there it was Monday. Well, not Monday, but Tuesday after the holiday. We continued the press. Clear that we're still in positive aspect in the fact that we saw an increase in shorts. Moving into it provides a nice fuel. We had a reset completely of short-term buyers. They're fading it a little bit right now, but we're still holding just fractionally flat to the upside. The other day we started out yellow, so it was okay, but it did get a little overbought there because that was quite a press going into it. But you know, this is one of those things where people say, well, it's time to short just because the market's up. No, we can go very extended time periods with this rising shakeout. And as long as we maintain the cyan underneath the red. Now, yes, it is a warning that when you have the red DOC like this, it's not going to last. So, fine, there are plenty of warnings. It's just a matter of waiting for a significant enough breakdown, and you're really going to have to get the red below that 7.5. I mean, it's going to be an interesting little pullback because I think there's plenty of room for this to retrace. And all the credit that Trump takes for the rally, he's going to have to take for the pullback when it happens. So it's not going to continue without some version, particularly with this. We're back to the danger zone again, and that would be an extension of this line right here. We're right at the edge of it because you get too much below this and central banks really have to get active, because if they don't hold that, then you're going to see a cyclical slide. Now you're seeing France, Le Pen over 44%. Of course, they all claim she's going to lose, but we've all heard that narrative before. I think there was, a 90% likelihood that we wouldn't have the president that we have. So that really, if she would win in France, it's the end of the EU. Plain and simple. I mean, everyone knows that. Bond risks are rising on that. And that will have a negative impact short term for the S&P, but long term, I don't see it as being anything significant. Individual trade agreements are what Trump has referred to as his plan, so you would just be going back to that kind of a status. From a bond standpoint, again, you're not really going to get much of a bounce from here, and if you do, it's only because there's bad things happening in the economy. The pressure's still to the downside because rates theoretically should be going up. I don't see how they can do it. They're really hamstrung with the amount of debt that exists, but hey, stranger things have happened. The little bounce in oil there on the belief that OPEC was actually squeezing supply. It's a misnomer because any supply they squeeze can certainly be filled in by U.S. production. As we saw, there's massive capability for increase of another few million barrels a day by shale, in the short term. So it's not really going to be that helpful. This is sort of an arbitrary level, I think, at this point. And it's mostly about production costs. And that's going to hold things pretty much at a baseline there. I don't think that it any more than that would make any economic sense for people to produce. And gold is still going to be the relative play, and I think that weakness in that particular case becomes attractive, particularly when you have an interesting setup. Now, in this particular case, we've been holding pretty even with the red DOC, so that hasn't really provided any oversold capability like we had way down at the bottom when we liked it down at 109. But if we do see any further reverberation in that, then I'll certainly be out there telling you when I think that it's another opportunity to jump in before a move. And we can see from a 5K standpoint, we started with the holiday and we just went straight up. We had a brief we got way over the top there. See, when it gets plus 25, that same thing happening on the daily. Nice DOC spread. Reset completely on that without hardly any dip into that. I mean, we came 50% into it and they bought that immediately. And then boom, we're right back to the same. We should be coming back up to those highs. All in all, it's good stuff. As always, though, continue to look for me on the Skype chat. If there's anything interesting, I'll certainly put it on. But this was a pretty clean start. We were expecting when we dipped down here when I was doing video for you all that we would come back to the highs. We took them out, which made for a nice little trade there. And then it was just a matter of following that up as it went. But then it got a little too extreme. As always, though, trade well. We'll talk again later.